As you all know, the sports card market has taken a massive dump since the February peak. And it seemed like every other week at that time we were hearing reports of record setting sales, whether it be the 86 Fleer Jordan, the LeBron James Exquisite, the Tom Brady Contenders Championship ticket, or the Luka Doncic National Treasures. Cards across the board were setting record highs, fueling demand for the sports card market as a whole, really serving as a tide lifting all boats, both large and small. However, since our February market high, which really serves as the definitive peak of this bull market, the landscape for the alternative investment sector, known as sports cards, has observed a considerable downtrend across the board with very few exceptions. In this video, I'm going to break down the top 5 reasons for this downturn in the sports card market over the past couple of months and explain why each is contributing to what will most certainly be a weaker 2021. The first and least important factor is the specific market cycle for each sport. The basketball market has seen the largest pullback in sale values relative to the football, baseball, hockey, and soccer markets. The NBA witnessed the largest rise in valuations, but also the biggest declines, and part of those declines can be attributed to the normal ebbs and flows of the NBA. Generally, the spring and early summer months are the worst time to buy basketball. Going into a preseason, there are usually 8 to 10 names being tossed around as a potential MVP candidate and/or title contender, but 7 to 9 of those names end the season brokenhearted as there's only one MVP and one champion. All other candidates fall short of these preseason expectations, which leads to a normal pullback. See the Giannis Antetokounmpo market over the past 2 years as a prime example of someone whose prices had a championship baked in, but it didn't come out on top, and we saw a pullback in the market even despite winning back-to-back MVPs. The second factor has to do with the overall health of the U.S. and global economy. CPI, or Consumer Price Index data, recently indicated a 4.2% inflation number year over year, and that doesn't even take into consideration certain commodities like lumber and gasoline prices, which have increased substantially since 2020. Factor in that the free helicopter money is beginning to finally dry up, aka not fall from the sky, and the fact that the current administration is considering taxing that money, aka retrieving the money as it falls from the sky, even before it hits the ground, essentially making it useless and frivolous spending for most Americans. Factor in capital gains tax increase plans from the current administration, the economy opening back up, diluting the number of dollars that can be allocated to the sports card market, the recent crypto 50% pullback. It's really been a recipe of uncertainty and disaster for collectibles as a whole. Despite all the bad news, sports cards have remained strong, all things considered, but it's important to understand that the economy plays a key role in how much discretionary income people have in their pockets and how much of that discretionary income they're allocating to investments like sports cards. The third factor that is absolutely contributing to the softening of the market is the overprinting that is taking place with newer ultra-modern releases. I'm looking at you, Panini and Topps. This comes as no shock for those who follow this channel, but this is something that I've covered extensively in previous videos. But new folks in the hobby are becoming much more savvy and sophisticated buyers. Many that came in the hobby over the past year weren't aware that most of the new products that they were buying were printed in quantities far greater than previous years' releases of the same exact product. Many have seen massive reductions in their collections of sets like Panini Prism due to the sheer number of cards on the market and the sheer number of cards on the population report for those sets. As the market has matured and the flipper investor collectors improved on how they're allocating their funds to their purchases, this market has made a major price correction, shifting away from high pop, overprinted cards to lower pop, rare cards, serving as a safety net to protect from future downturns in the market. The fourth factor and second largest contributing factor to this list is the massive run on the bank. What exactly do I mean by this? A run on the bank occurs due to a variety of reasons, but it's essentially an analogy where a large number of holders of a specific card attempt to cash in on that card at the exact same time. They can be cashing in on their cards because they see a high sale, such as the 86 Flair Jordan PSA 10 that sold over $700,000. That sale is enough to lure many holders of this card out from the woodwork and want to cash in on that valuation. Enough of those holders cashing in at the same time will crash the market in the event that there isn't enough buyers on the demand side to balance out the supply that is hitting the market at the exact same time. This is exactly what we have seen in just about every single high-end, high cap rate, high commodity type card that you can think of, whether it be the 86 Jordan, the 2003 Topps Chrome LeBron rookie, the 1996 Topps and Topps Chrome Kobe Bryant rookies. All of these cards had buyers attempting to cash in on record sales from January and February, wanting to lock in massive gains, only to be disappointed in March, April, and May to see their treasured investments lose nearly 2 to 3 times their valuations in a matter of months. However, none of the previously mentioned factors are nearly as important as the main factor that has contributed to the massive decrease in the overall sports card market. See, for most people, the average Joe isn't in the market for a $700,000 Jordan, or even a $200,000 Jordan. Most folks are buying cards in the $50 to $100 range or less. Why is that? Many folks who are in this hobby to make money have used a strategy to buy raw cards, grade them, and flip, hoping to eventually flip up into a key card like a Jordan rookie or a LeBron James rookie to serve as the centerpiece of their collection. Unfortunately, it leads me to the number one reason why the sports card market has collapsed over the recent months, and that's because PSA, the leading third-party grader in the market today, effectively closed their doors for business on March 30th of this year. Why is this the main factor? It's important because effectively overnight, the closing of PSA's doors, despite the massive backlog of cards that they have, killed the buy to grade to flip market. Much of the raw cards market valuations have their values attributed to the possibility that the card could grade gem mint. Now that a PSA 10 option is off the table, unless of course you want to spend $300 to find out whether or not your card is a PSA 10, which is the current going rate today for a Super Express order, which happens to be the only option available at PSA, that's quite excessive for 99.9% of the cards out there. Many raw card values collapsed effectively overnight. I mean, in the first 2 months of the year, I personally spent over 6 figures alone on sports cards, hoping to eventually get an order to PSA graded and flipped. That's no longer a possibility, and I can tell you that my individual buying of raw cards has had an immediate pullback because I don't have many avenues to grade. SGC recently lowered their prices back down to $30 from $75 per card, and I gave them a try, and I just got my order back within the past week, and I shipped it to the consignor this week. I just also sent another order again, but I'm not expecting to be blown away with the substantial ROI similar to the ROIs I was seeing in 2020 because I'm being charged $30 per card to have the card put in an inferior holder. I also gave CSG a try early in April, trying to get ahead of the backlog and the onslaught of orders that they were soon to see, which they did see, and hopefully offload part of this massive amount of inventory that I was going to be stuck with. But from the looks of things, they are now approaching almost 200 business day wait times for their bulk orders, which are surely going to continue to go up from here. It's really not PSA's fault, and I'm not placing blame on them. They had to do what they had to do, and I'm not blaming them that the market is down because of them. But we can't escape the reality that much of the card market was in fact being propped up by this possibility and allure of obtaining a gem mint grade. And again, effectively overnight, that promise disappeared and is no longer on the table for the foreseeable future. All right, guys, that's my take on what's been going on in the market. Overall, year over year, the interest in the market is still very, very high, and it's higher than what it was in 2020 when we began this roller coaster ride in the sports card market. Collectors, flippers, and investors all now know that sports cards are a thing, money can be made, cards can be collected and enjoyed, and lifelong participants in the hobby have been established. But it's been a rocky 3 months for sure, and full of doubt and uncertainty, and I don't see that uncertainty stopping anytime soon unless the grading situation cleans itself up. Let me know your all's thoughts down below, whether or not you agree or disagree, or if there's another factor that I'm completely missing, but those are my thoughts. We'll see ya.